All right. Hello, good morning, good evening, and good night. I hope you guys are doing absolutely fantastic because today we're going to be talking about TSLY. And this is not normally the video that I want to make, but this is a video on TSLY's downfall and the reason why TSLY really doesn't work for a Yieldmax ETF. If you've known this channel, you've known us for a very long time. If you've been here since the beginning, you've known that I've been a huge fan of TSLY, and I still actually do hold TSLY. You can see here I hold 51 shares in Canadian dollars, and then I hold about, if we go down here, 19 shares in American dollars. This is in my CIBC investing account, and I hold TSLY because it's one of the first Yieldmax ETFs that I ever bought, paying roughly about 60 to 70% at the time. Now it says about 116% yield, and we'll get into that later. But the reason why TSLY does not work as a Yieldmax ETF is because of Tesla, the underlying stock. TSLY writes synthetic covered calls on Tesla. As we all know, Tesla's a car company. It's a stock. It's a very volatile stock. We've seen prices as high as $380, and we're currently sitting at $217. And days like today, where Tesla has these negative 8% days, they reflect in TSLY. And as the strategy suggests in Yieldmax, which we'll get into in this video, TSLY takes all of this downside from Tesla, but not all of the upside. And that is, in short, why TSLY does not work for Yieldmax. But we're gonna get into more. What I want to do is I want to look at the dividends paid out by TSLY. I want to look at how it's performed over the past month and 6 months in comparison to Tesla, and I want to compare it to some other Yieldmax ETFs to talk a little bit about the potential downfall in TSLY. So if you guys are interested in that, we're up to 5,658 subscribers, 250 subscribers in the past 28 days. We're going strong still. Continue to subscribe, like, and thank you guys so much for watching this video. So let's get into it. TSLY's downfall. I hate to say it, but it's true. First here, I want to read this. The fund strategy will cap its potential gains if Tesla shares increase in value. What does this mean? Let's examine this. This means that Tesla, when it went here back in June, we'll say June 21st to about July 3rd, from about $181 to about $250, that's a $70 increase. What is that in terms of percent? We have $180 divided by 200 and what was it? $250. Yes, just to be exact, 250. Boom. Subtract 1. This is our percent return, a 28% positive return in the share price of TSLY, or sorry, Tesla. But in terms of TSLY, we only seen an increase from $15 to $17.72. Let's do that right now. 15. And to be exact, we're going to go 1508 right on the nose. Gotcha, 1508 divided by 1772. And this is just to see exactly what Tesla's price return was. So we're going to subtract here from 1. And you could see here only a 15% gain. So you're looking at a 28% gain in Tesla over this period versus TSLY, which was only a 15% gain. So you could see here, this proves this point in Yieldmax's strategy. The fund strategy will cap its potential gains if Tesla shares increase in value. And interesting enough, 15%, 14.89, TSLY, they basically have a strategy which looks to aim to get about 5 to 15% volatility in the underlying. So when Tesla has these huge moves, 28% to the upside, they were only able to capture what they promised, 15%. That's it. But if we continue reading here, the fund strategy is subject to all the potential losses of Tesla shares if Tesla shares decrease in value. Pardon me about that. But if they decrease in value, they're subject to all the losses. And you can see here, look, down 8.78%, down 8.83. I would pretty much consider that all the losses. This is why simply TSLY does not work for a Yieldmax strategy. And we've seen that over time because TSLY did a stock split. They started at $20. They did a reverse stock split of a 1 to 3, and they were back up to about $20 or so. But they've continued to trend down and way down over time. Look, they've lost almost 75% of their inception value because Tesla is just so volatile and it works against TSLY. Tesla, whenever they have big down days like this, it just drags TSLY down. And the dividends, although great, this 160% is not true because it's not all the time. You could see here they had a great previous month, but in months that followed, see 69 cents, 69 cents, a dollar. So their dividends aren't always this high. In fact, this is the highest dividend in the past 6 months or so, 7 months. That's what it looks like. So come to think about it, the dividends are not keeping up for TSLY. Sure, you can reinvest, but it has not worked as a Yieldmax strategy. One that I kind of want to compare it to is SQY. SQY is another Yieldmax ETF, and I'm using this because it's a great example. It's another Yieldmax ETF that I own. I own 39 shares right here. You can see I have roughly about $1,000 Canadian. I'm pretty sure I have some kind of American position in this one too. Maybe I'm wrong. But look, I have 39 shares currently here. You could see that if maybe I can pull up my position within my portfolio, SQY, they pay out a pretty insane dividend yield, currently about 83%. I'm down about 21% position. In my position wise, but I've definitely received a lot more in dividends because I've been receiving about $100 every single month, and this total loss here is only about $200. So if I'm receiving about $100 every single month from SQY, then really I'm up on my position because I've been holding it for about, we'll say about 7-8 months. But SQY as a stock, Square, the underlying stock, which is block, it's had its rough times. Look, it's gone up and it's gone down. Currently, it's actually been down from about March 25th all the way to where we are today, which is October 11th. But if we look at it, even though we've trended down over the past 6 months, there haven't been huge downfalls. We've gone from $73 to about $62. That was a pretty intense downfall, but you could see that time, May 16th to June 14th, that's about a month, falling over a month. That's not too crazy. Sure, just like TSLY, SQY will take all of the downside of Square, the underlying stock. But what happened to the Yieldmax version of this? It took all the downside, and when we look at the upside potential, you see here went from $64 to roughly about $72. And the Yieldmax version, it didn't fall behind too well. It went from $18.98 all the way up to $20.22, capturing a majority, but not all of that upside as they suggest in the strategies. But where has SQY performed over the long period of time? Look, SQY started as a $20 stock. You could see it did not start as a $40 stock suggested as TSLY suggests, because TSLY did a stock split, SQY did not. They started at $20. Majority, they were actually above their inception. They're only recently below, but they've been paying out huge dividends. Just check the yield, 84%, and relatively keeping their capital base. That's pretty insane in terms of an investment. So this is one that kind of shows how Yieldmax's strategy works, but it doesn't work for certain stocks, and I don't believe it works for Tesla, and that's why I say this is TSLY's downfall. Tesla has proven to be time in and time again way too volatile for a Yieldmax strategy, and it shows as TSLY's share price has decreased more than 75% in value and will likely only continue to decrease as Tesla has huge swings to the upside, which TSLY will capture half of that, and then huge swings to the downside, which TSLY will capture all of that clearly. So if you guys enjoyed this video, just my opinion on TSLY. It's funny, it's ironic because I still do hold TSLY. Most likely I'll continue to hold, or what I'll do is I might look to sell it because maybe I might put it into SQY, a better performing Yieldmax ETF. So if this one does float your boat, we're up to 5,658 subscribers. Let me know what you guys think in the comments down below, and I love to hear. I will read your comments. All right, have a great day, and I hope to see you guys in the next video.